Now, the first consideration when trading the Forex market should be your risk. Now, we've got the perfect tool to make sure you control risk on every trade. Now, I started my trading career almost 30 years ago in the trading pits in the city of London. And I vividly remember the first thing my old boss said to me when passing my exams and I entered the trading pits for the very first time. He said to me, "Andrew, don't lose the bank's money." It wasn't go and make a fortune, it was don't lose. And it was that very first lesson that I had 30 years ago that still resonates with me today. Now, of course, we all know that losses are an integral part of trading, and no honest trader will ever tell you that they don't have losses. But the issue I want to talk to you today about is risk. Every trade that you take in the market has risk. Trading is a risk business, and that's absolutely fine. But far too many traders fail in this business because they don't appreciate risk and they don't know how to control it and manage it to their advantage. Now, some of you will have seen my previous video already, the Albert Einstein's theory of the eighth wonder of the world, and that's the power of compounding. For those that have not seen it, had a chance to watch it, I encourage you to do so now. The link is above this video here. Now, for those that understand the concept of the compounding theory, this video will be very useful for you. So, as professional traders, we appreciate that in order to achieve a long-term success, we need to understand and implement the compound theory. But understanding the compound theory is one thing. How do we actually apply it in our Forex trading? Well, there's a whole bunch of calculations that we need to work out in order to fully implement the compounding approach. Ultimately, you need to calculate the size of each trade based on a number of ever-changing variables. For instance, the value of a lot or the contract differs from one pair to the next. You have to take into consideration the constantly changing balance of the funds that you have in your trading account. You have to consider the predetermined percentage risk being applied to each trade, be that 0.25%, 0.5%, 1%, or whatever that is. Now, the size of each trade is also dependent on where your stop is placed. And that, as you recall, is the price level at which you will exit the market if the trade goes against you. Now, of course, you can use an Excel spreadsheet or try to calculate all this manually, but by God, that's a tedious, let alone a cumbersome task. That's why we've developed this tool, which is yours to download today absolutely free. Now, this tool will do all the hard work for you. It will work out the size of each trade based on all those variations that I've mentioned, the percentage risk, the stop loss levels, and so forth. So clearly, by using the power of compounding will increase the dollar amount you're risking in profitable periods, but it will reduce it and protect your account in losing periods. This tool will also enable you to look at risk in a different light. Okay, you will consider risk with respect and give it the respect that it so deserves. It's the only way to consistently grow a trading account. Now, let's have a quick look on the screens and I'll show you how this powerful tool is used in action. Okay, so as we've said, you can download this tool now from the link below. It's an Expert Advisor or an EA. That basically means it works with MT4 or MetaTrader 4 trader platforms. So once you've downloaded and installed the tool, it's going to look something like this. You'll see a green line and a red line. The green line is your take profit target and the red line is your stop loss level. And you can adjust these up and down wherever you want to place these exits in the market. Now, the important thing to note here is the risk analysis. We put in a risk tolerance here of 1%. Remember, when you're compounding, you want to have a predetermined risk amount on the account. The risk percentage won't change. The value of that dollar risk will, of course, change as the account grows and indeed goes into drawdown. So at the moment, we've got a 1% risk. I can change this to 0.5%, 0.25%, or whatever it is. 1% on this account, which is a $10,000 pretty much practice account, 1% on that is about $97. I'll never be risking more than 1%. If indeed I need to move my stop loss level lower, then of course my lot size will change. It's going to work out the lot size that I need to maintain a 1% risk in this currency pair. This is the pound Australian dollar. We know one lot is 10 Australian dollars, but I'm working in US dollars. So the tool works it out, converts it all, tells you exactly what you need, the lot size in this particular currency pair, the pound against the Australian dollar. Now, if I was to click the buy entry, it's going to know that I want to place a buy order, and these are going to be by level, so I can do that now, and you'll see the buy order has been entered, and the lot size is 0.17. There's the symbol, prices down here below. Okay, now I'll just close that out. It is only a practice account, not to worry, so I've closed that trade. Reset. If I was to place my profit target below where the current market price is, then the tool is going to work out automatically that I am going to be a seller, and it would click to sell. It would default as a sell. Again, I can adjust my risk reward ratios here. I can move my profit target lower down. I can move my stop loss level in. Again, I'm only risking the 1% of the account, still less than $100, less than 1% of 10,000. Okay, so my dollar risk is never going to change. My risk reward ratio will change as I move my profit targets away and my stop loss levels up and down and so forth. Click to sell will place an order there as well. Now, another cool feature about this is that we can also use pending orders. So clicking pending order will allow you to place an order away from the current market price. So the current market price, for example, is trading at 76.58. If I want a pending order, I will have a pending order above where the market price is at the moment. Basically means I'm a seller. I want the market to rally up to my pending order where I'll sell, take profit targets down here, and the stop loss slightly above that swing high. Gives me the risk reward ratio 2.06 to 1. It's going to trade 0.18 of a lot. Again, maintaining my maximum risk. 1% of the account will never trade more than that 1%. So clicking the sell limit would place that order in as a sell. You see, a very, very powerful tool. Keep you focused on the risk. Keep you focused on maintaining the same risk profile, essential when you're compounding in the markets. And that is the only way to make long-term gains on a trading account. Okay, so I hope you found that insightful and indeed useful. You can download the tool free of charge from the link below. As always, if you enjoyed the video, give me a thumbs up. If you didn't enjoy the video, give me a thumbs down. Leave a comment, subscribe to the channel. If you haven't already done so, make sure you follow us on Instagram. Thanks for listening, and until the next video, goodbye.